After the market settles in, we'll be buying back the October 5, 230 calls right here, the 235s that are in the money, and talk about how to roll that out. But step one is to see if I can just close out this downside, which is kind of like getting what you can, salvaging. This is all going to be recapped and a full analysis inside the club so you can look through this position and study it more. But as far as the max profit, the most you can make on this is $10 and buying it back for a $9.85 credit, which is sacrificing 20 cents, which is great. The main thing is how I'm going to leg into next week, because I still have these November 235 calls, which are up $1,000 and they're worth $8. So that's a $3,200 position right there. The next phase of this is figuring out how to manage and close out the in the money call that's threatening right now, because that in the money sign right there, ITM, is going to be something that you have to monitor very closely. The intrinsic value right now on these 235 sold October 5 options is $6.44. So there's roughly 60 cents of time value left in these, which is pretty high actually, considering the volatility yesterday going into earnings right here. You see it's at 59% today. That was at 180% roughly yesterday going into earnings. Whenever you have a short-term option, or if you're ever trading earnings and you have no days left, as you can see here, 0 days left because these expire today at 4 o'clock Eastern, then you need to have a plan of attack to take off those and at least have the ability to manage your deltas accordingly, especially on a bullish move after earnings. The calendar spread is sometimes a tricky strategy for new traders, even experienced traders, in choosing that right strike price. The way that I did this trade, and all of you saw yesterday, was using that projected move. Now I want to talk about the same mentality moving forward for next week, and how you can also structure your trades to have consistency. If you bought these, the stock not only did it go up, and it's almost at 185, but they lost money. They went down. I sold these for $1.56 yesterday, and I could buy them back for 96 cents, and the stock went up 8%. That's why you have to be careful trading short-term options when you're buying them. That's why I'm a much bigger advocate of selling short-term options, because you have so many different things that are helping you if you're wrong. Be methodical and not put on too much risk, and be able to show all the members inside the community now what is possible as a professional trader, not a gambler or a speculator, is being more defined risk. Doing a vertical is certainly a much more conservative and business-like approach instead of just buying a call or buying a put. Anyone can do that, and that's why a lot of new traders in regards to options lose money. With 1,300 open interest, we shouldn't see almost a dollar-wide spread. Being able to read into that and know what's going on is certainly half the battle, because a lot of people don't even realize that, and they just buy at the ask and sell at the bid, which is unfortunate. But that's kind of showing you the more advanced side of how to manage both the winning and the losing side of a spread trade through earnings. That's defined risk, that's methodical, that's smart, and that works. If we buy back these sold 185 calls, we sold them yesterday as part of this spread for $1.56. I can buy these back for 78 cents and make a nice $400 profit on those, and then roll that into next week, but not sell the 185s. Maybe sell the 190s, which is what we're going to analyze. This is part of analyzing that rolling trade. The trickiest part of this business is timing the fills of when to buy back sold calls, which is something that I've talked a little bit about with the leaps. We'll be talking it a lot more throughout the rest of the year and into next year. Now you can see I have a flat theta. Now I'm not losing any money in time decay. I've brought my delta down from a positive 230 to a positive 90, which is much more manageable after a big earnings move. And now I have one uncovered 185 call right here. I could sell a short-term 187.50, which is what I'm going to do, just to kind of show you the diversity here and how you can have this work for you and use different strike prices. Stay plugged in, get ready for a big week next week, and thanks so much for spending your time with me this morning.